Hello everyone and welcome back to RJ Infotech. I'm your host Rajesh Ramya. Today we are diving deep into our weekly market wrap up for the first week of May 2026. We'll break down the key Indian market moves, critical sector trends and what you should watch in the week ahead. This week the Indian markets navigated through bouts of mild volatility but managed to end on a relatively stable note. Benchmark indices like the Nifty 50 and Sensex traded within a narrow range throughout the sessions. Investors remained cautious, weighing mixed global cues against a flurry of domestic corporate earnings announcements. While we didn't see a strong directional breakout, the underlying sentiment showed that buying on dips remains a key strategy. Let's look at the three major factors that drove the market momentum this week. First, global cues. Continued uncertainty around international interest rates and growth forecasts kept global investors on edge. Second, the earnings season. Corporate results were a primary driver with intense stock specific action based on performance. And third, institutional activity. Domestic institutional investors provided much needed support as foreign flows remained inconsistent. Moving on to sector highlights, starting with the heavyweights in banking and financials. Banking stocks largely showed sideways movement this week as some investors chose to book profits after the recent rally. Over in the IT sector, stocks remained under significant pressure at various points during the week. This was primarily a reaction to shifting global tech sentiment and fluctuations in currency movements. In contrast, the auto and FMCG sectors showed admirable stability, acting as reliable defensive plays during volatile patches. Meanwhile, the mid-cap and small-cap segments continued to attract selective buying interest from retail participants. However, we are also starting to see signs of caution here following the exceptionally strong performance in previous months. To summarize, the current market sentiment is broadly neutral with a slight positive bias. The markets aren't showing inherent weakness, but they are clearly waiting for a strong trigger to move higher. Triggers like a clear global direction, sustained earnings momentum, or fresh macroeconomic signals from the government. As we look ahead to next week, keep a very close eye on the remaining major earnings announcements. Global trends will continue to dictate the opening mood, so watching the US and Asian markets is essential. Finally, keep track of crude oil prices, currency volatility, and the net buying or selling by institutional players. And that brings us to the end of your quick weekly market wrap here at RJ Infotech. If you found this analysis helpful, please hit the like button and share this video with your fellow traders. Don't forget to subscribe for more clear, simple, and data driven market updates every single week. See you in the next one.